Hello friends, welcome back to our lecture series on management accounting. I'm here to continue our discussion on the statement of cash flows. Now I'll be dealing with the numerical problem of statement of cash flow. I'll tell you how to solve a practical problem which is given to you in your examination as a question. So how to deal with that, I'll be telling you step by step with a numerical problem. So let us start with the problem. This is going to be the first problem as per indirect method. So suppose if there is a question which says that from the following details related to accounts of a company called LK Limited, they are asking you to prepare statement of cash flows, and they are providing you their balance sheet like this balance sheet of 2022 and 2021. For 2 years they are providing you this balance sheet. Equity and liability, they have shown you share capital, reserve, surplus, debentures, provision for taxation, proposed dividend, trade payables, and then the total of this balance sheet. Just do remember that each and every item of balance sheet is supposed to be considered while preparing statement of cash flow. I'll tell you how it is being done. But do remember that when we are looking at the balance sheet, we have to first recall that we should understand that on the liability side, equity, share capital, equity and liability, they belong to which activity? Equity, share capital basically belong to financing activity. Reserve and surplus, they belong to operating activity. Debentures, they belong to financing activity. And these current liability, they again go to operations. So we have to remember that on the first very side, that is your equity and liability, you are finding that it is a combination of all activities. It has items which belong to all three activities, that is operating, investing and financing activities. So we have to basically segregate. We are on a segregation drive because we have to provide not only the cash flow, that is cash inflow and outflow, but also in a classified manner we have to provide. So we'll have to tell what is there into operating activity, what is there into investing and then financing activity. On the asset side, if you look, we have plant and machinery, obviously investment you have made, land and building, investing activity, investments. So apart from current liability, everything else is what? Investing activity, it belongs to investing activity. And trade receivable, inventory, cash in hand and bank, they belong to your operating activity because they are basically part and parcel of working capital changes. Just do remember, whenever we are preparing statement of cash flow, we have to exclude, we have to relax certain items under the head of operating activities. For instance, cash in hand or cash at bank, whenever it is given in the question, do remember that we will not consider, we will not show it under the head of operating activities. Reason is very simple, because we are deferring its treatment, we will be using it at the end of the statement of cash flow. So cash in hand, cash at bank or cash equivalent, say for instance marketable securities are given, we don't show it under the head of operating activities, that is working capital changes. We actually defer it till the end. At the end we are going to show it. I'll tell you how to show this cash in hand and bank at the end. Now after this balance sheet, this question is giving you some additional information. It is saying that depreciation was charged at the rate of 25% on the opening value of plant and machinery. The question also report that during this financial year, an old machine costing rupees 50,000 was sold for rupees 35,000 and its written down value, that is IDV, that is depreciated value, is basically rupees 20,000. Further question reports that you have made a payment of rupees 50,000 towards income tax. So do remember this income tax payment, as I told you in the previous lecture, payment of income tax belongs to operating activities. It will be shown as cash outflow under the head of operating activities, right? And then we have building under construction was not subject to any depreciation. So we'll assume that building, whatever amount is given, it is under construction. So there is no depreciation which has been charged on it. I always suggest my learners, whenever you come across such kind of numerical problem, you should always start with the working note. We should first make a preparation how to proceed. Remember, if you start your journey of preparation of statement of cash flow in a very planned manner, do remember, you will get your answer automatically. There is no point of doubt. You should understand what you are doing. Apart from simply technically knowing it how to prepare, you should know in what direction are we heading, are we moving. So we should first know that I'll have to provide the information related to cash flow in a classified manner, that is operating, investing and financing activity. So the first and foremost thing is, I always suggest my learners that you have to open certain ledger accounts. First is your plant and machinery. If you have any asset, you have to show it. You have to open an account for it to identify the amount of depreciation, or if there is a purchase or sale, you can identify it by opening a ledger account. If there is an item called proposed dividend, provision for taxation, do open an account for it. And once it is being done, you are ready for preparing statement of cash flow. So getting aligned with what I said, what suggestions I gave, I'm starting this problem with the working note. I'm telling you how to solve it. So first of all, what I have done, I have opened this plant and machinery account. On your screen it is visible. I have taken the opening balance of plant and then closing balance of plant from the balance sheet. Remember, the opening balance of plant and machinery, where to show? Some learners who are not from commerce background, they ask me, sir, where to write? I have a confusion. Do remember, whatever you have shown on the asset side of balance sheet, it will always have debit balance, and all liabilities, they have credit balance. Debit balance means its opening balance will be shown on the debit side and closing balance will be shown on the credit side. And if you have a credit balance, your opening balance will be on the credit side. So I have shown here the opening balance of this plant and machinery, to balance brought down, and then closing balance of the same on the credit side, by balance carried down. Now this is what I have done. After this, we have to search for any information related to plant and machinery in the question. And here comes our point that we have to first have a look at additional information. If you look at the question, if you look into the adjustment number 1, the first adjustment is saying that you have to charge depreciation at the rate of 25% on the opening balance of your plant. Opening balance is given here 5 lakh rupees. If you charge 25%, depreciation is 1,25,000. So whatever information you have to first start putting it in your plant and machinery account. So I have shown here by depreciation 1,25,000. So the first additional information, that is adjustment, it has been dealt with. So it is always a good practice to start with the additional information. I have shown the amount of depreciation on the credit side. Then comes the second adjustment. So if amount of depreciation is given, I have shown it here. Now you must be thinking, sir, what is the role of knowing the amount of depreciation? We have two important objectives here. First is, once you know the amount of depreciation, it helps you in showing the non-cash transaction. Depreciation being a non-cash item, while preparing the statement of cash flow under the head of cash flow from operating activities, we shall be nullifying its impact by adding it to the profit, and will write there depreciation. So depreciation is a non-cash item, so this will help you there also. Once depreciation is entered, the second item, second transaction in the question says that you have sold out a plant and machinery at the rate of 35,000, but its WDV was 20,000. So which means that the value of your machine was 20,000, but you sold it out at 35,000. So your cash receipt is 35,000. So you will pass an entry bank account debit 35,000, to plant and machinery 20,000, and remaining 15,000 is your profit, which will go to profit and loss account. So having this assumption that the depreciation must already have been shown into this plant and machinery, we only show the amount of profit and loss on the debit side of plant and machinery. Now there is no further information in your question related to plant and machinery. If it is there, we have to take care of that. We have entered all transactions. So it's time for us to look at the total of plant and machinery. If the total of credit side is greater than that of debit side, then do remember there must be a purchase of plant and machinery. And if it is opposite to it, then obviously there would be a sale of plant and machinery. Because there can only be only two reasons for a reduction in the value of plant and machinery, either depreciation or sale out. And increment is only because of purchase. So in this question, we have assumed that we have found this value of 3,45,000 as balancing figure, which is considered to be as purchase of plant and machinery. Now this 3,45,000 rupees, I'll tell you where to deal with. We'll deal with this amount under the head of investing activities, and I'll show you when we'll be dealing with that specific part of our question. So my dear learners, the first step is that whenever in your question asset account is given and some depreciation, some purchase or sale is given, it is always good to open a ledger account so that you should have a clarity. It will help you in preparing your statement of cash flow in a systematic manner. And there will not be any lapse on your side, you will not skip any point. Second point, as I told you, if provision for taxation is given, again we have to open an account for it. Question has given you opening and closing balance. Along with that, they have also provided you the payment here. So payment of tax we have shown here to cash or bank account 50,000 rupees, and remaining is what? The balancing figure is considered to be allocation from profit and loss account. So we came to know that 80,000 rupees must have been allocated from profit and loss account on account of provision for taxation. Now you must be learning here that we have to sense from the movement of transaction. Question has not disclosed any information regarding this allocation of 80,000. But based on the information provided with regard to provision for taxation account, we had tried to sense that what could have been done, the way in what manner company might have managed with this provision for taxation account. Company has provided, the balance sheet provides you opening and closing balance, and additional information provides you the payment. So remaining would be what? If the sum total of debit side is greater than that of credit side, definitely the difference could have been an allocation from profit and loss account. So while preparing your working note, you will write there, just like I have written, by profit and loss account, under bracket you will write balancing figure, that is 80,000 rupees. Now we have dealt with another hurdle, that is provision for taxation. In this question, intentionally I have provided you these transactions so that when you are solving a question, you should know how to deal with such adjustments. Proposed dividend, I told you, we always assume that the proposed dividend of previous year is supposed to be paid in the current year. So by balance brought down 1 lakh rupees is given, to balance carried down 2 lakh rupees is given. So we'll assume that this 1 lakh rupees must have been paid in the current year. So the question is silent about it, but still we make an assumption that the dividend proposed in the previous year must have been paid during the current financial year. So we have shown here a payment of 1 lakh rupees on account of proposed dividend. Now the remaining value, that is 2 lakh rupees, which is proposed in the current year, which is being shown as a proposed dividend of current year, it must have been allocated from profit and loss account. This is our assumption, and we'll again write here as balancing figure that we have got this amount as balancing figure. So this working actually not only solves your problem, not only makes it systematic for you to prepare statement of cash flow, but also gives an indication to the examiner that my learner is very much aware of the way we have to deal with the statement of cash flow. After this, the next point is the profit with which we have to start. Now in this question, the profit and loss account, the surplus amount which is given in the question is 40,000. So we have to first find out, with the help of adjustment and other items, that what are those points where we had taken some money from profit and loss account. And if it is a non-cash transaction, then obviously it is supposed to be added back. It has to be, the impact of it need to be nullified. There are two ways to deal with it. Either you straight away do it in the statement of cash flow, or you should go and do it in the working note and then go ahead with the profit before tax and extraordinary items. So both the ways are open to you. But I suggest in this question I have tried to deal with this calculation in the working note, and then I'll proceed to the question. So I've taken profit of 40,000. I'll go to the working note, and I have found that under the head of provision for taxation account, we had taken 80,000 rupees from profit and loss account. Since it is a provision for taxation, it's not a tax payment, so it is a non-cash item, although it belongs to operations, but it's a non-cash item. So we'll be nullifying its impact. I had deducted previously, I'll be adding it back. 80,000 I have added. Now what we'll get? I'll get profit before tax, and now it becomes 1,20,000. And if you look at the question, there is a proposed dividend also. And in proposed dividend account, you will find that we have allocated 2 lakh rupees from profit and loss account. Then obviously proposed dividend of 2 lakh rupees will be added back, and when we add it back, we get profit before tax and extraordinary item of 3,20,000. With this, we are all set to prepare our statement of cash flow. Now I'll show you how to start with the statement of cash flow. At the top, we will write statement of cash flow as per Ind AS 7 for the financial year, for the year ending 31st March 2022. You can write here. We have three columns here, particulars, amounts and amounts. We'll be starting with the first head, that is cash flow from operating activities. Now from the working note we have taken net profit before tax and extraordinary items. This is something which I had already discussed in the previous lecture, that why we always give a mention that this profit is before tax and extraordinary items. So do remember, if your question has reported any extraordinary or exceptional item, that shall be disclosed separately. So that is why we have written net profit before tax and extraordinary items 3,20,000. Now this point onwards the process remains the same. We have to nullify the impact of non-cash and non-operating items. Non-cash is clear to you because we are preparing statement of cash flow, so we have to ignore non-cash items. But a question comes, sir, why non-operating items? Because we are, as of now, we are dealing with only cash flow from operating activities. So we shall not talk about anything else. We'll only talk about cash flow from operating activities. So any item which belongs to non-operating activity shall actually be excluded. Its impact shall be nullified. So if you now you must be understanding, you must be realizing why I had initially prepared the working note, the different ledger accounts, just to provide you clarity. So starting with plant and machinery account, if you go back to plant and machinery account, you will find the amount of depreciation there. So depreciation being a non-cash item, the impact of it need to be nullified. Nullification means if you had subtracted, you have to add it back. If you have added, you have to subtract it. So whatever you have done, you have to nullify, you have to reverse that transaction. So depreciation being a non-cash item, it's a non-paper transfer. I have added here an amount of 1,25,000 rupees as non-cash item. Second item from the balance sheet is visible that there was a transfer to reserve with an amount of rupees 50,000. Again, it's a non-paper transfer. There is no cash involved into this transaction, but it has reduced the amount of profit. So we have added back the amount of transfer to reserve to this profit. Simultaneously, from the same plant and machinery account, we have got profit on sale of machinery, which has actually increased my profit. And remember, this profit has actually been received in cash. It's a cash transaction. But why are we subtracting it? Because it is a non-operating item. So do remember that merely with this qualification that an item is of cash nature, it doesn't mean that you will show that under the specific head of cash flow. Unless it belongs to that activity, it will not be shown. Here this profit on sale of machinery, if you remember, company has sold out a machine of 20,000 at 35,000 rupees. So the entire amount was received in cash. But do remember that it doesn't belong to operations. That's why we have nullified its impact. Since it was increasing my profit, it has increased my profit. I have to make it the actual, the operating one. So we have subtracted the profit on sale of machinery, which is 15,000 here. Now you must have understood that we have to simultaneously deal with non-cash as well as non-operating items. After adding and subtracting, we found an amount of rupees 4,80,000, which is being called as operating profit before working capital changes. Now at this step, I'll take a pause and first let you know that the way we have proceeded, it is the operating activity which requires significant attention of yours, because this is the point where most of the learners, they are committing mistakes. So we have taken what? I'm just giving you a recap. We have taken net profit before tax and extraordinary items, and we have nullified the impact of non-cash, non-operating item. So anything which belongs to operations, that will only be considered. If it belongs to investing or financing, its impact need to be nullified. If there is any non-cash transaction, obviously we have to nullify its impact. And now we have got operating profit before working capital changes. Now this heading itself is indicating that we have to move ahead with the treatment of working capital changes. So after this, what we'll do? We'll actually take up the operating profit before working capital changes, and now we have to adjust this operating profit before working capital changes with the movement of working capital, that is current asset and current liability. For your convenience, initially what you can do is you can write as heading that I'll be adding any decrease in current asset and I'll be subtracting any increase in current liability. So if decrease in current asset is added, then obviously increase in current liability will also be added, and opposite to it, that increase in current asset is subtracted and decrease in current liability is also subtracted. This I am not going to discuss again because I have already discussed with you, I have already explained it to you, the way we have to deal with the current asset and current liability, the movement in the change in the amount of current asset and current liability. So what we'll do now, after providing a heading of decrease in current asset and increase in current liability, we have to find out each and every item of current asset and current liabilities, barring those items for which I have opened an account. I told you why we do so, because those items have already been considered by us. So if you look at the trade receivables, there is a decrease in the amount of trade receivable, which means that tacitly it is an indication that company must have received this money from its debtors. So 2 lakh rupees on account of trade receivables is supposed to be added here. So I'll be writing here trade receivables 2 lakh rupees. Why I'm writing it under the head of adding category? Because it's a decrease in the value of trade receivable. Whereas if you look at the liability side, we have inventory. Inventory is basically your current asset, and there is an increase in amount of inventory. That is why we have shown it under the subtraction, that is deduction. I have shown inventory 2 lakh rupees. Under bracket, the bracket indicates the minus, that we have to subtract it. Trade payables, again trade payable is a current liability. There was a decrease in current liability, that is trade payable in this question. So I have subtracted 1,20,000 here. So in this working capital category, we have found addition of 2 lakh rupees and subtraction of 3,20,000. Now you must be thinking, sir, why not provision for taxation? Why not proposed dividend? Because we have already opened an account for it, and it is supposed to be, the taxation will be dealt by us at the end, will be showing as income tax paid here under the head of operating activities, and proposed dividend, the dividend payment shall be shown under the head of financing activity, and the amount which you have allocated from profit and loss account has already been adjusted with while arriving at an amount of rupees 3,20,000. So after this working, you will find what? Operating profit after working capital changes. Once it is done, 95% of your job is done, which belongs to operating activity. So you can take a sigh of relief that now I have found operating profit after working capital changes. 3,60,000 is the value. Now before ending it, before calling it to be a cash generated or cash used in operating activities, you will have to search for the payment of income tax. That is there any income tax paid given in the question? If you look at your profit and loss account, you will find that there is an amount called provision for taxation, and there we found an amount of income tax paid, that was 50,000. So we'll show it as an outflow. I have deducted here less income tax paid 50,000. After subtracting this income tax paid, what we get is either cash generated from or cash used in operating activities. In this question, since we found the positive cash inflow, that is the plus amount is greater than that of subtraction, so we found cash generation of rupees 3,10,000. Now the same 3,10,000 shall be written in the outer column as well under the head of cash flow from operating activities, that we have generated cash from operating activities. Sometimes regarding income tax, my learners have an objection that, sir, what if this income tax is paid on dividend? So will it still be shown here under the head of operations? Answer is no. If only income tax payment is given, it will be shown under the head of operating activities. If there is a dividend payment, if there is a tax on dividend payment, that should actually go to essentially its own activity, that is financing activity. So if there is any dividend tax on dividend, or if there is any charge on dividend payment, that shall be shown as cash outflow, but not in operating activities. It should go to financing activity, because that is the appropriate activity for this specific transaction. Now once operating activities is done, you should assume that significant part of preparation of statement of cash flow is done, because this is the activity where most of the learners, most of the students commit a mistake. So steps are very clear. You have to take profit before tax, you have to nullify the impact of non-cash and non-operating items, then you get operating profit before working capital changes, and once you work out with the change in working capital, you find operating profit after working capital changes, and eventually you have to show the payment of income tax. So steps are very clear. You just demand from the question, is there any income tax paid? You have to show. Is there any change in working capital? You have to show. Is there any non-cash transaction? You have to show. So if you are aware of the step by step treatment of these transactions, the chances of mistakes are, you can say it is minimum, but you can actually make it zero also by the practice. So moving ahead with the next activity, that is cash flow from investing activity. Now when we are dealing with this activity, it means I am going to deal with the asset side of your balance sheet. The current asset have already been dealt with under the head of working capital. Now we will be dealing with the long-term assets. So we'll be taking up cash flow from investing activities. Now here comes the role of that plant and machinery account, which we had opened at the very outset under the working notes. If you remember, we started our journey with the working note, and there I opened a plant and machinery account. In that we found purchase of plant, and the amount was 3,45,000. So this purchase of plant means the cash is going out. So it's a cash outflow under the head of investing activity. We have reported the purchase of plant is 3,45,000. We also had sale of plant. There was a revenue. There was an inflow of 35,000 rupees. Now this is going to be shown as cash inflow, and this is the reason why this amount is not in bracket. If you look at the land and building, there was a change in the value of land and building, it increased, and since question already had a mention that building under construction was not subject to any kind of depreciation, so there was no point opening this account. If there is an increase in the value of land and building, it will be shown as purchase. If there is a decrease, it means you must have sold it out. Since it was an increase, we have shown it as we have assumed it to be a purchase. We have shown purchase of land and building 2 lakh rupees, and there was an increase in investment also. So we assume that there is a purchase of 1 lakh rupees of investment worth rupees 1 lakh, and once we aggregate them, we find that the sum total of outflow is greater than that of inflow. We had only one inflow, that is 35,000, rest all is outflow. So we will write here cash used in investing activities, and the amount comes to be 6,10,000 rupees. It is very simple. And this head is quite an easy task for you, because there are no further steps are involved. Either there is a purchase of asset, or there is a sale of asset, nothing else. After this, we'll move on to the last head, that is cash flow from financing activity, which means the liability side of the balance sheet, where we deal with the long-term liabilities. Equity shares, since the value has increased as compared to previous year, we'll assume that the issue of equity shares might have taken place, 2 lakh rupees as cash inflow. Debentures also increase, the same transaction, that we assume that the same treatment, that we have assumed that there must be issue of debentures, so cash inflow is 2 lakh rupees. Now under the proposed dividend, if you remember, in that account we have found the value of dividend paid, that is proposed dividend of previous year must have been paid in this year. Now you will realize that while dealing with operating activities, we excluded it. Why so? Because we have to show it here. We are showing here dividend paid 1 lakh rupees. Now after aggregating them, we can find either cash generated or used in financing activities. Here the inflow is greater than that of outflow, so your cash generation from this activity is 3 lakh rupees. Now we are done with all three activities, so we have to now aggregate all three activities to find out net cash generated from or used in different activities. So here we'll write A plus B plus C, and you find that in operating activities cash generation was 3,10,000, in investing activities cash used was 6,10,000, and in financing activities again cash generation was of rupees 3 lakh. So eventually your net cash generation is 0, because plus minus the value you get is 0, and that is why in this question opening balance of cash and closing balance of cash, they were the same. So here we'll add opening balance of cash and cash equivalent, that is 2 lakh rupees, and the result automatically comes that the closing balance of cash and cash equivalents, that is rupees 2 lakh. So do remember, my dear learners, whenever you find the opening and closing balance of cash and cash equivalents to be the same, do remember that your net cash from all three activities is supposed to be 0. It's an indication for you. So you must have now understood how easily we have actually prepared this statement of cash flow. If you go step by step, the chances of mistakes are very minimum. I'll once again be coming to you with some more practical problems, some more relevant questions, and will tell you how to deal with those significant problems which you come across in your examinations. I hope you must have understood and enjoyed today's lecture of mine. Thank you so much.